Hi, I'm Vince Sorace, here to talk about the Kutcho Copper Project Feasibility Study.
Vince, it's good to see it. Like we saw you not too long ago, middle of September. I think we had a great conversation then, and this was a moment that I think the market was looking forward to. I was looking forward to speaking to you about the feasibility study numbers out. How do you think the market's reacted?
The market's reacted, I guess, not as well as I think it should have, to be honest with you. And I think that will come as the market's digesting this news. Because the way I look at this is we are trading probably one of the cheapest market caps and cheapest price on a P to NAV basis in our peer group by far out there right now. And I think people are going to be digesting this over the next period. And I think we're going to see just on a value basis alone, I think we've got significant upside still in our share price.
So you're not happy. I mean, you've had a good run of it this year, and since we spoke, you were 85 cents when we spoke. You're up over $1 now. The momentum seems to be there, but like you say, you're still only 100 million market cap company.
Yeah, I'm tough to please. We've had a great run over the year, yes, and it's been the build up to getting this feasibility study out, which I think is an instrumental achievement in the life cycle of this project. Don't forget, I think we talked about this last time. This has been around for the better part of 20 years, and it's had a lot of false starts to it, and it never really kind of came to this point of completion, this point of confidence in over 20 years. And I think we're there now. And I think what we put out with a very trusted engineering group like CSA Global, a very robust feasibility study. And our objective was to build this, and I'll use the word robust again. I didn't want people out there poking holes in this. I didn't want from, the guys like the analysts and the bankers and all the guys out there who can, this doesn't have it. This was built, it's solid. From what we did and the use of our metal prices in the feasibility study to, how we designed and constructed the mine plan around this, to how we proposed, the capital around this. There's a lot of things we could have done, but this up to be the most, call it robust study, because I want this thing to lend itself to credibility from a number of standpoints, including M&A. If I'm looking at guys out there wanting to kind of take a strategic investment in this or buy the company, I want this to be real, and this is real.
But here's the thing for you. I mean, we talked about this last time a little bit, actually, which was the initial capital cost, right? $483 million bucks, right? You're $100 million bucks company. There's a problem with that. So it really depends on what you're going to tell the market about, what you're going to do with this feasibility study. Is this a precursor to you trying to go out and raise funds? In which case, that's going to be an interesting conversation. Or is it a case of, hey, at least we know what we've got. That's a really good foundation from which to build. Because the other thing we talked about last time was exploration. So what's the plan?
Yeah, I mean, listen, I don't need to raise $483 million right now. That's down the path. As far as I'm concerned, right now, I'm trading around probably a 0.2 or less P to NAV. The peers in the group out there right now, and if you want to see it, we put this together. It's in our presentation on the website. Go take a look. The average in our peer group right now is trading at about 0.56 to 0.6 P to NAV. That means I have upside of 3x from here if I can achieve something that out of the peer group. And I would also argue.
But what is that thing? What is that thing? How do you get from 0.2 to 0.6? You've put out a feasibility study. You're way ahead of some of your peers. So there's a disconnect.
I think now it's making the market aware of what we have. That's what it is. Now, again, and I'll refer back to, and I think I've said this, and this project is at a 20-year life. It hasn't really kind of had a level of confidence that it can get now. So now it's on us to get out there and kind of tell the world and show the world, that, what this is. And I think, this has primarily it's been a 98% retail story for the last, couple of years. I don't have an institutional audience. That's what I'm hoping to build right now. And that's what we will continue to strive for and build over the coming months. So we don't need to go out and raise $480 million right now. That's years down the road. There's a lot that we can accomplish to increase the value of this project and the value of the asset, one, through hoping to achieve metrics closer to our peer group, and that would reflect directly into our share price. And number two is upside. Now what we're going to be focusing on is upside of the project, which, I'll put up a quick slide here for you, and let's talk about exploration potential. And
before you do, Vince, right? Before you do, leave the screen up. That's fine. Here's the question I've got for you. There's one kind of disconnect which you do need, and that's to do with the legacy history of this thing. You said it yourself. This is 20 years in the making, right? People are making assumptions and connections with the past, which is the big problem that I think you're having to overcome here. So there's a disconnect that you certainly do want to try and achieve in the marketplace. So how do you help people go, this feasibility study tells us that there's a good project here. Whatever you thought of it in the past, forget it. It's time to look forward here. The IRRs are good. Well, I'm not saying they are good. You need to tell me if they're good. Or tell me your sales pitch to say to people, this is a new old story. Yep,
it is. I mean, listen, look at the margin. Yeah, it's a good IRR. It's a $460 million after-tax NPV. But let's not stop there. Again, this is based on $1.50 zinc and $3.50 copper. The sensitivity and the leverage to copper on this is amazing. If you go look at what we said in the press release, and we did two sensitivity analysis here. We did the one to spot prices across the board, right? Great. And it's amazing. There's all a $900 million plus NPV on spot prices on this project as it sits today. And that's $4.50 copper, and, zinc prices up where they are. Well, okay. So just in case there's naysayers out there that, zinc's never going to maintain itself at $1.50 or $1.60. Okay, fine. Then let's put all those prices back down to base, zinc, silver, and gold. And let's just focus on copper, because there are a lot of people who believe that, copper in the future will move up. Well, if I focus on that metrics, and that's one of the sensitivity tables, well, at $4 copper today, and that is the long-term analyst consensus right now, it's $4 copper, leaving all of the other metal prices at base case. Well, now I'm talking about having a $613 million post-tax NPV and a 30% IRR. For those of you who are bullish out there, and I go to $4.50 copper, well, now I'm talking about a $664 million post-tax NPV and a 35% IRR. That's the universe we're playing in. And also, don't forget my capital numbers, and I would challenge this with previous reports out there. That's 2021 inflationary built-in numbers. Okay, we didn't cut any cards there. So we've got current, and in this environment that we know where there are inflated prices with steel and concrete and all this kind of stuff, that's built in there. But I'm not using inflationary copper prices at $3.50. I should be using $4 and $4.50. So that, I think, is even more of the picture, which is very, very compelling.
Right. So I want to come back to something you said, which is we don't need to raise $483 million. Do you mean, we'll do an equity debt split, or do you mean you bring in a partner? And if so, when? And what would that deal look like?
Well, of course. So I've got opportunities. There's always a debt equity split. So I don't need to raise all that money, number one. Number two is, forget, we've got Wheaton. Wheaton still needs to contribute, and there's two important points to this. So I've got about 58 million US sitting there in the bank for the stream I did with Wheaton. Okay, so what is that? About 75 million Canadian. So that's there. Two is, if you notice in the Wheaton deal, we were talking about a $20 million US bonus payment if I hit a 4,500 ton per day throughput. That's what this study is based on. So there's another $20 million US. So suddenly I'm over $100 million funded on this project with no dilution. That's just coming from Wheaton against the stream. And then again, so you have a big debt component to this. Now, the other opportunity, and this came with me announcing about a month and a half ago, that was around the royalty buyback from Sumitomo. What I was keyed up on there was getting rid of the ROFR on the offtake. I am now freed up to do a strategic deal on the offtake side. And there's been no lack of conversations with multiple parties out there already for the past number of months. We are a very sought after concentrate. We have a clean con. We are in the upper percentile of concentrates. If everybody knows what's happening in the concentrate market these days, it's tight. And it's going to remain tight for a very, very, very long time. So there's another way there against an offtake that I can raise strategic capital to go towards the build and the capex of this project without necessarily having to raise that money. There are a lot of moving parts. And again, let me also emphasize, you'll see in the final reports that we file, but there's opportunities. We can't say that in this press release. But as far as capital goes, you're always out there looking for used equipment, which could be a fraction of the cost to build this thing, which drops your capital number significantly. We've got other opportunities, low-hanging fruit that we're investigating right now, and we're talking to groups right now about things like taking the road, the access road, which is a $30 million budget in the capital, and actually assigning that to a third party who would finance it. Now we would then lease it back, put that into OpEx. That takes $30 million off that 480 number right off the bat. So there's all of these.
Okay, so you got some optimization components that you can do. Obviously, correct. You would, right? But at the base case, we know what your costs are. I guess the question for me is, it comes back to that. I mean, I gave you some options there myself, which was, here's your feasibility study. So what? So what do you do with it? What's the plan?
What do we do with it now is we drive this project through permitting to a production decision, number one. Okay, that's the strategy now. In the interim, in parallel to that, is how do I get the value of this company up to where it should be? And, that's going to come through educating the market now, because as you said, it's been 20 years, it's been a little disjointed. So now we go out and educate the market. But the other important thing, and this is where I want to share my screen with you here, is the exploration upside potential with this project is amazing. And this is value that we believe we can get into this company next year. So we've been in the last couple of months, and this primarily came about as we shifted into this open pit mining scenario for the main lens. And you can see that, it's the main lens, the Sumac lens, and the SO lens that comprise our project right now. The main lens and the SO lens are what made feasibility study. Sumac is all inferred. That's close to 10 million tons at about 1.5% copper that hasn't made this feasibility study. So there's two parts of low-hanging fruit here. What can we do to extend the open pit with respect to main? That is low-cost production, okay? And we're looking at two different directions, right? But especially you see that gap between the main and the Sumac lens. That is historically only ever had one drill hole put into it. We believe that the mineralization does trend between main and Sumac. With a much lower cutoff grade now and much lower production costs, that is a huge opportunity where, if that mineralization exists and potentially even the top portion of Sumac, which is near surface, if we can expand the pit in that direction, that's instant value. And that's something that you can do, and you've seen other companies do, where we can drill that off quick, we can get to a level of confidence quick, and we can do a sidecar PEA or a sidecar even PFS around this to show the value that can come into the company into this mine plan very, very quickly. And the other part of the low-hanging fruit is Sumac. Our development basically runs when we start on main, and we're driving development straight down to ESSA, literally year one. We pass 90 meters in front of Sumac, the Sumac lens. So, Sumac is something that we're going to put some money into. We're going to bring it up in confidence from inferred into M&I. That's mine life, right? That could potentially be another 4 to 6 years of mine life. And it's sitting there, slow hanging fruit. It's just drilling it off at this point and seeing how it fits into the model. Okay,
so this is quite good actually, because at 10, 11 years, that's good for a company. It's not necessarily that attractive to a major or strategic partner.
Yep.
If you can extend the mine life, then that could be a game changer for you, because if this becomes 15, 20 years, It's a different set of conversations. And that's where I wanted to get to with, where does exploration fit in the mix here? Because you've got the feasibility study, the sidecar of whatever else you discover sitting in between CMAC and the main open pit is the plan. So what do you do with the feasibility study for now? Just park it up, focus on exploration for a bit because you think you can add to it?
Correct.
Right. Okay. Have you got money? How much money are you going to allocate to that?
We've been working through 2 months because our exploration efforts and our strategy around exploration shifted now that we went to the open pit on Main. So we've been working vigorously with our engineering consultants who did a lot of our work in 2018 to put together an exploration plan. We've got that plan in front of us. Now it's for us to choose how aggressive we want to get, how much we want to spend. I mean, I could probably next season drill up to 30 or 40,000 meters if I wanted to. Okay, that's the extent of the plan that we're talking about here, because it's not only in resource conversion or call it pit expansion and all of this, but there's also blue sky opportunity, and these are the blue sky targets. This horizon that hosts the SO Sumac and Main deposit repeats and folds itself 3 times through our claims license. It hasn't seen any exploration since 1990, and VMS districts tend to get bigger when you go at them. But back to your point, well, how are we going to get money? The nice thing is that we're in Canada and BC, and what we're able to do here is raise money called flow through money. And right now, that capital, which can go directly into exploration, I can raise money at a 1.45 factor or premium to market to raise any money I need to do for exploration. Listen, I'm going to pick my spots. I think I've said this. I'm cap table sensitive. I think we're worth more than we're trading today significantly. I'm going to be doing a lot of work over the coming number of weeks to try to get that share price a lot higher where I think it should be. And, if I can raise money at a significant premium with little dilution to something that I think I can add a ton of value to just by doing this work in 8 months, starting from today, sure, we're going to be going at that aggressively.
When will you make that decision about what that number is?
Probably in the coming month.
Right. Okay. Because obviously you're sitting there at 1.1 billion pounds of copper equivalent, right? At the moment, in terms of the M&I, you've got 460 or so, I think something like that on the inferred component. You can bring as much as that through, but the exploration bit, how quickly could you do this sidecar in terms of bringing some numbers into the M&I category? Quickly,
we can drill this out next year. The exploration plan that we're looking at is we can drill out this next field season. And considering we just finished a feasibility study and we've got all the updated metrics to everything that else would fit into a sidecar PEA or a sidecar PFS, we can do it very quickly. We can do this next year, all of it.
Right. Okay. Because what you're working towards, or what it seems to me you're working towards, is building something, painting a picture for a mid-tier company to come in and either work with you or certainly lend you their balance sheet to be able to get this thing financed, because copper's not cheap generally. I know you're kind of low-cost version of copper, but it's still not cheap in terms of capex. In terms of the number of pounds of copper equivalent that you think you need to be able to present to someone like that, what's that number? It's not 1.1 billion. What's the number?
It's hard to say. I don't want to speculate too much on that, but it depends on who my audience is. I mean, let's be realistic. Is this a project that First Quantum or Lundin is it gonna move the needle there? Probably not, right? I mean, it's gonna be there's other producers in our universe that I think it's already attractive to. Okay, I think we're already there, and I think we're already there with respect to even just the confidence in the potential upside in mine life as it's presented. I'm going to continue down that path and I'm going to prove it out and I'm going to do all that, but I think we're already there. So now it's playing the game, it's moving down the path, it's continuing, moving this in forward. And so you're right, the feasibility study shows confidence in the asset. It is what it is here. Now, everything we're doing in parallel is one, moving it down the path to permitting, because the more and more you get down that path and closer to permitting, essentially the higher the value of your asset becomes because you continue to de-risk it, right? Number one. Number two is, and my permitting budget isn't a lot of money. And that could be part of a financing package that I do with a strategic. But it's also, moving this thing down the path. Now all I'm going to be talking to people about is, well, how much more valuable I can make it. I've got the confidence in the feasibility study out. People know what this project can look like at minimum today. Now I want to show them, well, how big can it get? How much better can it get? And all this potential is there.
Right, because I'll come back to a point you made earlier, which is you're so heavily skewed towards retail, it's probably damaging for you. You're restricting your opportunities. So when you say, how do you go about telling institutions what it is that you've got? Because I'm looking at this thing going, okay, that's quite a nice company. And so it's kind of a company maker in its own right. Nothing huge, just a good, solid company. But if you get some institutional money in there, I think it helps you go and raise the capital that you need. It may improve your liquidity. Who knows, depending on how they play that. But it makes your money cheaper when you do come to raise capital, right? So that's why it's important. And I think it's important for the retail guys too, but it's the institutional money that's going to give that solidity and comfort. So what are you going to do about that?
Well, I've been in the capital markets for 30 years. I got relationships with pretty much every bank on the street. And so that's what we're doing now. We started doing that 2 or 3 weeks ago, but I take it back to everybody was waiting to see this study. So now do the traditional non-deal roadshows with the bankers. I'm looking for analyst coverage. I got one out of Red Cloud. Okay, that came out. That was actually prior to my fees. I think we'll see an update to that come out soon. But I think I'm going to be set up here for a number of different groups to provide analyst coverage on this, and we'll post those on the website when we get them, or who wrote it. People can get it themselves. But then it's hitting the street, doing these non-deal roadshows, getting awareness out there of the project, talking up the story. That's how we start building the institutional investor audience. And then ultimately, when I think the time is right, then you can do things like an institutional financing and then really kind of bring them into the mix.
Well, that's what I was going to ask. Is that you're going to need to do that to get them be interested, to one, cover you, and two, come in and quickly get them into this, not just picking up scraps here and there.
I've already been offered institutional capital. Right now, I've said no. Okay, I think I'm too cheap. So I've said no. I think, and I don't need the money right now. So I will take my time. I will go out there. I will do my best to market the story, to try to get, something as far as a valuation that I think we're more comfortable with. And at that point, I will look at raising some money, but it will be, again, at I think a more proper price point. And so, there's more upside for the shareholders.
Do you think, just with the institutional hat on, or just dust it off, put it on, people talk about gold being sort of anti-inflationary investment in the sense that, in troubled times, gold is safe harbor and all of that. Do you think that some of these green metals, like your coppers, like your nickels, can possibly get that status where they are seen as anti-inflationary measures, given the kind of electric thematic and the whole greening of whatever we're doing?
I think, listen, the theme, or the thematic piece to copper right now is tied into so many things. We're tied into the whole battery movement, right? We're there, and that's never going to go away. But we're also tied into this entire infrastructure movement out there. Look what the U.S. just announced, right? And they're throwing $500 billion at things that are copper intensive, let's say. So that's not going to stop, right? In this world, especially post-COVID, you're going to see many countries around the world doing this, throwing money at infrastructure. And the infrastructure spends these days are very different than they were 20 years ago. 20 years ago, very traditional roads, bridges, and yes, wires in the sky. But today, look what the U.S. is spending it on. They're spending it on renewables. They're spending it on EV infrastructure. They're spending it on these things that are like multitudes more copper intensive than any of the traditional infrastructure spends in the past.
Yeah, it's kind of interesting. So I was reading something by Nick Snowden. He's the commodity strategist at Goldman Sachs, and he's saying that basically the copper market's sleepwalking into a huge supply crunch, akin to what happened in the oil market back in the 2000s. So it's
I think so.
yeah. I think the signs are there. That's for sure.
There is signs of that. And listen, I mean, I alluded to the fact that I'm already in conversations with strategics on this. And, with respect to interim or broader type financing objectives, these guys have their feet on the ground. These guys are the truth to what's happening out there in the copper market. And trust me, they're worried about supply side in the copper space in the years to come. So it's a good sign. I like hearing that, obviously. But like I said, those are the guys with their feet on the ground. And in the concentrates market, and just generally speaking, the supply side of the copper market, they're not seeing this let up for many, many years forward.
Okay, well, Vince, just want to check in with regards to the feasibility study. I'm glad we had the conversation about exploration. I think it paints a clearer picture in my head about the way forward and some of the options available to you. And maybe we'll come back on and talk money at some point as well. Appreciate your time today.
Thank you. Always a pleasure being here.